327, 2013. Intraday morning market alert. Time is 8:11 a.m. Pacific Standard Time. And, once again, to our traders around the world and our trader network and MMT network is this. Here's the following, guys and girls. The Dow had an opening yesterday. Well, let's talk about the open today. The Dow opened up at 14,559.65. The previous day's close was 14,559.65. The high was the high, but here is the thing. The intraday low on the Dow was 14,309.55. What does that mean on an intraday level? That means that the Dow was down 120 points on that opening bell. Currently, the Dow is only down 57.29. One of the things about extreme overbought markets, as we are in this bull, is that we start to see how this price volatility. Yesterday we were up 122 points off of that bottom yesterday. We gave all of that gain back. That's what price volatility does at bull tops. What is going to happen is, yes, we are overbought. This is a daily chart. They're buying on the 10-day simple moving average. On the same note here on the S&P 500, this is a daily chart. It's not a weekly. We can see where the exhaustion highs are getting put into play. We can see where the prior day up move, that it gave it all back. That is part of price volatility at extreme bull market tops. And they're getting weaker and weaker. Okay, that's the S&P 500. The Nasdaq composite, which is faring a little bit better, it was up here. Once again, it had a big move yesterday and it started with the gap down. And this is where the price volatility at a bull exhaustion price highs, meaning that the market is exhausted up here at these top levels. And we go up, we sell down. So yesterday you have the big move up, but then you start and you're at the 20-day simple moving average on the Nasdaq composite. That is the mid-morning update as to how the markets opened, how the price volatility came into the Dow. We gave up every move yesterday intraday, so we were up 122 points, we dropped 120 points, and now we're coming off of the bottom. That is what the bull does, is that they buy those dips in every one of these market tops that's overbought. And it won't be too much longer before the real pullback that we keep telling people to be aware of will happen. You go through, when bull runs are at the high, you go through a lot of price volatility in both directions. So the big up days and the big down day, that's how we verify them. We can clearly see that the Dow is coming off. We can see this candle right here where it came lower than what yesterday's low was. This is a big up day move of yesterday, but look how it gave it all up. This is the mid-morning update on the Dow. We'll be doing the closing bell update as well. This way, MMTs, we know that the Dow's at 14,510. We know the Nasdaq 100 is at 2801. We know the Nasdaq Composite is at 3244. And the S&P 500 is currently only down 4.52 handles. But let me tell everyone, on the weekly charts and the monthly charts, as we have clearly stated, price volatility works both ways at market tops. Just like in the bear bottoms, you come up, you come down, you test the low end of the bear, then you come up, then you come down, the same difference. They both have their role. The bull has a role at top in resistance, and so does the bear side of things. But right now, this is how the price volatility is starting to show its hand in the broader indexes across the board. And once again, it is 8:15 a.m. It's 3/27, 2013, live in the markets, MMTs. And we'll be watching where individual equities themselves had made a bottom in their bull runs, come up and hit, and then roll over and sell off as well.